Turn hundreds of dollars into thousands of dollars in 2023. I want to talk to you guys about what you really want from investing, what's realistic for you to do, and how are you most likely to turn a small amount of money into a much greater amount of money. Once you do it once, then you'll find ways to do it again and again. And that's part of what this video is about. I'm going to give you a plan, a strategy, simple basic steps to develop your approach. Then we're going to talk about what's realistic for you. Then we lead into the solo strategy, where when you have that one strategy that works and you can just do it again and again and again, that will be more rewarding for you than following all these headlines or trying these different strategies or approaches. People got into binary options. People got into a robot that picks stocks for you. People are going into one industry group and then swinging back, going to another, and they're just losing money on every shift, every transaction. I want to talk to you guys about the best ways to understand what's going on, what you really want, how to get that in the stock market, and how to find the one angle that works or speaks to you that you can do again and again and again. Nothing we say in this video is intended as personalized trading advice for you. You tell me in the comments below this video, why are you really investing and it's not money? The way I see it, for you to go from hundreds of dollars to thousands of dollars in 2023, you need to do three things: educate, plan, and then act. Education is simple, and there's no excuse not to do it because you have all of human knowledge at your fingertips on your smartphone. I tell you guys this all the time. Anything you want to learn, you can learn the gestation period of an otter right now if you wanted to know that. And especially if you are a newer investor or you're just learning about a lot of this stuff, take the time just to even watch some YouTube videos, read some articles, because you're going to get used to the language and the cadence of things, how things are going to progress going forward. This is very important. So dive into it, learn what you need to learn, or you'll be able to start putting different things that happen together and you'll come up with your own understanding of what that's going to mean for different types of investments, for example. When you feel comfortable after the education phase of things, which some of you don't need it, but I'm not going to say that. I even need education. I still learn stuff every single day. That's very important. Be a sponge. But after you're done the education phase, it's time to get into what I call a simple plan. People typically don't know what to do. There's generally way too many options of different types of things you can invest in. You read the financial headlines, and they say buy this, and then you read more, and they say buy that, and they say buy that, and you're like a cat following a laser pointer all over the wall. Here's the phases of what I consider to be a simple plan for you to get involved with investing, to turn small amounts of money into greater amounts of money. You need to refine the focus of what you're going to invest in. The more you refine that focus, the more powerful it becomes. So you start with, what stock markets are you going to be looking at? Are we talking about stocks on the New York Stock Exchange, or are you looking at the pink sheets and over-the-counter bulletin board and all those other markets that have less high-quality companies on them, but there's possibly more rewards there? You decide for yourself what is the best markets to get involved with. If you want to learn about all the different markets, the options that are out there, there's videos we've done that you can call up and watch right now. Just search on the Peter Leeds YouTube channel. You decide too, this is the most important part, the price range of the stocks that you want to invest in. If you're investing in stocks that are $100 a share, that's much less likely for that to double your money in 2023. But if you're investing in stocks that are trading at a few dollars each, penny stocks, anything at $5 or less per share, they have a lot more likelihood of multiplying your money. It all comes with more risk though too, of course, but you need to say what markets you're going to look at, what price range you're going to look at. And if you decide I'm going to be investing in stocks that are $2.50 each or thereabouts, that will tell you which market you should be looking at, because that's not the stocks on the New York Stock Exchange. You'll find those on alternative markets. Even sometimes on a major market like the NASDAQ, they'll have stocks trading at that level. So that refines your focus more, and you have less options. So you can use your brain power and your time and your resources on a smaller target. But here's the tripping up point that everybody falls victim to. Not everybody. The majority of newer investors fall victim to this. If you ever hear about a stock for free, there's a reason for that. And if you see it on CNBC, that's because they have a channel to run and they need to give you information. So they're not trying to be disingenuous, but there's a reason behind it. But if you go anywhere below mainstream media, and even I know a lot of people don't even trust that, then you're getting into free stock picks that are just on message boards or on the internet, or they get sent to you from a free online newsletter, or even in your fax machine they used to do in the 80s a little bit, or they mail it to your house. And all it is a company that is doing very badly, so the promoters buy up all the shares for cheap, and then they put lipstick on a pig. And nowadays, they don't even just do lipstick. They're doing perfume. They're giving liposuction to these animals. And remember, this video is not about penny stocks. It's just, that's what we're talking about right now. The reason penny stocks have a bad name is because of so many people getting tricked by these promoters who are lying to you and putting lipstick on the pig in front of you and saying, look at how great this company is. And people don't know better. They're going to invest their money in those shares. That doesn't help the company. That helps the promoters who own the shares that they bought cheaper. They sell it back to you because they got you to buy it because they tricked you. And so people don't realize how pervasive this is. Do not ever buy a stock pick that you've heard about from one source, and especially if you've heard about it for free. So you say, I'm going to invest in stocks that are $4 or less on the NASDAQ, and then you watch and you see which of these stocks is as volatile as you need them to be. If a stock's going to go up 20% next year, that's not going to double your money. That's not going to turn hundreds into thousands. It's not going to more than double your money, which is what you're looking for. So you want to look at the share behavior. How volatile are those shares? You want a little bit of volatility if you're going to be seriously trying to turn hundreds of dollars into thousands of dollars. The way you can look at this is you look at the beta. Go on any online financial portal and you'll see the beta. The beta represents how much more or less volatile is a stock compared to the overall market. So if a beta is 2.0, it means it's twice as volatile as the average stock. 0.5 on the beta means it's half as volatile. So 0.5 would be a utility company or something very consistent where it's maybe range bound and trading flat for a long, long time. What you want is a good quality company with a high beta, and understand that beta is like velocity of money. It's a readout. It's not telling you what the stock will do. It's not telling you even what the stock is doing or what it does. It's saying what the stock did. It was more volatile than the market by whatever degree. But here is the secret weapon you have, and this is the next part of the simple plan for turning a small amount of money into a larger amount of money. You get the opportunity to choose what industry group you're going to focus on. That's your hidden secret weapon because you are in an industry right now. You go to work every day in an industry. What is that? Is it construction? Is it services like restaurants? Is it the medical field? Here's the thing. You may say, well, I'm a nurse. How is that going to make me a good investor? But because you are in the medical industry, you'll understand certain terms. You'll have an advantage when you're looking at a biotech company, for example, compared to the guy who's working in manufacturing. And this is the last part of the simple plan. What country are you going to focus on? Because there's a lot of conversation about it might be better to buy international stocks right now, especially if you want to get into a country like India. I've been pretty hard on India in the past at certain times, but they're really coming around. India is going to be the leading economy in the world in terms of growth from now for the next couple of decades. Forget the population overtaking China. Their economy won't overtake China's, but it will grow rapidly. It'll be the growth engine of the world now that China is on a slowdown in terms of how much they're growing. They're still growing. It's growing single digits, low single digits, as opposed to double digits, as it has been on average over the last decade. So the simple plan that you have to decide every aspect of this. What markets are you going to trade? Because I do believe that the best way to turn a small amount of money into a lot of money, I've thought this for my whole career, is low-priced shares of stock. So if you decide, or if you agree with me that that's the way to do things, if you want to make a big move safely in a shorter time window, and I say safely, there is risk always, I'm not saying there isn't, then what you want to have is a simple plan which starts with which markets you're going to trade on, what are the price ranges of the stocks you want to look at, where are you learning about these stocks from, are you doing your own due diligence? That's the way you should do it. Everyone should be the one who's the focal point of their strategy to uncover and identify stocks that will work well for them. You look at the share behavior. How much trading volume is there? How much Volatility is there. By looking at the beta, you can look at the chart to see the trading volume across the bottom. When the volume picks up, a lot of times the move will gain tremendous momentum. And most people, if you live in America, will invest in stocks in America. Sometimes you want to consider, though, is that the best place for you? And I would say if you're a newer investor, then absolutely it is. I think if you're a newer or less experienced investor, or one just getting started, or who has a lot of growth ahead of them, I would stay focused on your own country, because if you can't find a good stock here, what makes you think you're going to find a good stock in Europe or Asia? So once you're comfortable with your plan, and of course you should paper trade. I always tell you guys this, and I know that typically most people don't do it because I don't even do it anymore. I did it when I had no money. I paper traded on paper. You have a piece of paper and a pen. You say, okay, I'd buy $10,000 of Tesla. Here's the price. Here's the date. You put it down. You watch what happens over the coming weeks. You have $90,000 more of imaginary money. Buy a lot of other stocks. Watch what happens and see, most importantly, what's the difference between what you thought was going to happen and what actually happened. In that difference, that is where all the learning happens, where you become a better investor because you are becoming more powerful. You have a better understanding. You're starting to learn. But I'm the same way. I'm impatient. I want to invest real money so that I can really be invested in that stock and it will matter to me more. But I do believe it's a good idea to go against your impulse and step back and take a breath and really think and plan things out before you make a move. If you learn and you still haven't made your first trade, that means that you can learn more and you're still sitting there with the money in your hand to invest. And now you know more than you did a couple of days ago. Just keep learning and the clarity of action will appear as you take each step forward through the fog. But all of this is leading up to, you've got your strategy now. All of this is leading up to what I call a solo strategy. You could do one thing that works, that you can identify, and just do it again and again and again. And that might be more rewarding for you, and you'll have less losses over time than if you do everything like everyone else is doing. They're trying to invest in everything that goes up. They don't want to miss a single penny. You know what? Miss a single penny. Miss a lot of it. Don't worry about gains that you could have had or gains that other people make. What is the one trade that works for you? So let me add a little bit of color to the solo strategy. And I didn't even want to do this because I think that then people think this video is trying to sell something. I don't make a penny. They paid me up front. I don't get royalties from the 3rd edition of Penny Stocks for Dummies. I'm reading you something out of it that is about the solo strategy. The good news is that by doing less, you may be able to achieve more and then be able to do it again and again. Scale down the bottomless ocean of strategies, industry groups, and various sources of information to one single thing. A strategy that creates profits for you. So further on here, I'm talking about the solo strategy, the aspects of it. An effective solo strategy needs to be scalable, consistent, reliable, adjustable, repeatable, and understandable. Scalable means if it works for $100, it'll work for $1,000. It'll work for $10,000. Consistent means that the results of your strategy plays out exactly like you thought it would just about every single time. Reliable, this approach to do this one thing results in profits for you on whatever money you invest. It needs to be adjustable so you can adjust certain aspects around the margins a little bit over the months so that it always gets better and better and better. Repeatable, say for example, you're investing in companies that right when they have a stock split, then you invest in the company because typically after a stock split, on average, the stock prices go higher in the coming months after that. So something like that would be repeatable because there's a lot of stock splits. But if you find a strategy that works, but it's very rare that setup emerges, that isn't repeatable, so it's not necessarily a good solo strategy. And the very last part of the solo strategy is that it needs to be understandable. You know why the stocks did what they were going to do or what you expected them to do. You understand what are the price drivers of the stock and why that strategy works. So those are the aspects of a solo strategy once you go through all the aspects of your personal plan. But section 4 of this book, edition 3, Penny Stocks for Dummies, I'm not promoting the book. I'm telling you, it's one of the best financial books ever written. And the thing is that it says penny stocks because it's about penny stocks. Some people get freaked out by that. They don't like penny stocks. Understandable. I get it. It's got a bad name. A lot of part 4 of this book is an incredible take on getting your headspace right, which is the next step for you after you've got your solar strategy. If you want to do it that way, you don't have to have a solar strategy, but I do think you should have a plan. If you've got the plan, I think the next phase is then getting your headspace right. This is the forgotten thing that everybody doesn't know how to do. And the whole new part of that book is about getting your headspace right. And it's all leading up to what will eventually be stockology, but that's years away. But to get your headspace right, what I mean by this, whether you learn it from me or anybody else, okay, it's just important that you do it. I explain how obtaining mental focus all starts with a situational audit. By identifying where you're starting from, all of your progress and successes will be clear and encouraging to you. You'll realize how much better you do trading stocks with the power of complete mental focus in your pocket, or skull, I suppose. You'll also be able to see the benefits of discovering a real, deeper purpose and know it's not money. Let me say something about that. People invest and they always look at the money. How much money did I make? How much money did I lose? Don't think of it that way. It's about money, but money is the root of all production, not the root of all evil. And money, for money's sake, is irrelevant. Money is just a way of transferring capability. So if you have a lot of money, you can go to Sweden anytime you want. You get on a plane, you fly to Sweden. It takes money. If you have enough money, you can do that whenever you want. It's about freedom because money is a way of achieving things or having more freedom in your life. That's the way I look at it. Very important. Don't love money for money's sake. Don't invest for money's sake. There's a deeper meaning. Are you trying to impress your kids? Are you trying to impress a girl? Are you trying to impress yourself? Are you trying to have a new challenge? Are you trying to have a hobby that is worthwhile? What would it mean to you? Ask yourself that. What would it mean to you if you turn a few $100s into a few $1,000s in 2023? What would it mean to you? What would you do with the money? And what if you actually developed a solo strategy that is repeatable and consistent and simple and understandable and scalable? What would you do with those few $1,000s? And what would that mean for your life then? You're not doing it for money. You're doing it for what the real thing that matters to you is at the end of that tunnel. Figure out what that is. You'll pay a lot more attention to things like this video, for example. You'll read a lot more. You'll learn a lot more. You'll take it more seriously, which is the missing part. I don't think people take investing seriously enough sometimes. And last thing, and I put it in the comment section beneath this video. I don't want to talk about it because it'll come across like I'm trying to sell you something, and I'm not. I'm giving you examples. If you want to invest for the long term, then there's a way to do that. And I'll put an example of a few of the paragraphs from one of our recent reports about a stock that we think will do well in the long term. And then for contrast, we also are giving you an example of what it's like to invest in terms of swing trades, shorter term time frames to make smaller gains relatively. So you're trying to make 20% in a couple of weeks or 10% in a couple of days, and you do it again and again and again. So there's different approaches. Both of these will help you turn hundreds of dollars into thousands of dollars in 2023. But I'm not promoting these stocks. I'm not talking about these stocks. I'm just showing you examples of the type of investments you can make depending on what you decide your plan is going to be. I just pulled out a few paragraphs from the recent report. Out of about 20 paragraphs, I just gave you one or two just so you can see an example of what we're looking at. Same thing with the swing trade, which is also below that one, beneath in the comments of this video. So you guys tell me, do you have an investment plan? Do you know what you're trying to do? Most people just say, oh, that stock might go up, so they buy that stock. What are you trying to work towards? You guys tell me, what is the real reason beneath the money that you're trying to invest? Figure it out. Take your time. Don't rush it. Just think about it, or don't think about it until you know. It'll pop into your head. You tell me in the comments below this video, why are you really investing and it's not money?